On today's episode of the Wealth Guide podcast, we were joined by two very special guests, Gabrielle Micah from the Finance Co. and Charlie Unan, State Manager of FBAA New South Wales, to discuss the financial gaps that show up at the end of financial year. And this is where brokers could be looking at things earlier. All right. Welcome to the Wealth Guide podcast. Jack, how lucky are we today? Look at what we've got. Not one guest, we have two.
I know, I should have shaved my head. So
You are
I was actually going to say, with all the talent in Australia, you had to pick us two.
Oh, stop it. Okay, let's start with the actual special guest. So Charlie Unan, State Manager, New South Wales, FBAA, thank you for joining us.
It's my pleasure.
It's such a privilege to have you. And Gabs, I'd love to say it's a privilege having you with us, but it's so normal that I feel like you're part of the family and that it's just an expected thing. But you do bring insight and knowledge from time to time.
I don't know if that's a slap in the face, but I'll take it anyway.
Any
compliment's a good compliment. Isn't that right, Charlie?
Hey, I'm the spotlight today. We're just the outcast on the side.
That's it. So today, guys, what we're going to talk about, and thank you so much to both of you for joining us, is the financial gaps that show up at end of financial year. And financial year is fast approaching, and what brokers could or should be looking at earlier. And, you know, it's wonderful to have you both here. Obviously, Gabs, you are a broker, or so people tell me. And Charlie, you see a very different lens than nearly everybody and anyone. You get to speak to all the brokers.
Correct.
So you hear everything that is said. But then in that added layer, you also get to speak to all the lenders and you hear all the different things. So the things that we really want to sort of start off with today is, as the end of financial year approaches, what are we seeing beneath the surface in conversations right now, whether it be a client conversation, a broker conversation, and Jack, I didn't forget about you, an advisor conversation. So, you know, where are people focusing their attention and what do you think they could or should be doing differently or what's missing? So would you like me to open with you, Charlie? Or
Yeah, absolutely.
Yeah.
Absolutely. Look, I think from what I see from my perspective and, you know, from the broker's lens, lenders as well, a lot of the conversations are being done and started, I guess, around that May, June sort of period.
Yeah.
Whereas I feel, and guys, correct me if I'm wrong, I think this conversation should be initiated around, you know, February, March.
Yeah.
That gives all parties at least ample time to be able to work together, strategize, and I guess if it's something got to do with lending or financial planning, it's enough time to be able to implement something before that end of financial year.
Perfect words.
I guess what we see, and you know, like today, I was at an aggregator event, and this is from the asset side of the industry. Numbers are through the roof at the moment. Everyone's trying to get, you know, their tax write-offs and their assets and lending sort of put into place, but it's just not enough hours in the day to push that amount of volume through.
Yeah, and I think you hit the key word, right? People hear end of financial year, and what is the normal word that comes to mind when you think of end of financial year? Tax.
Tax.
Yeah. But there are so many other layers in that strategic position that end of financial year should and could be aligning with, right?
Absolutely. Like, and you know, we say, as a broker and as a lender or as an industry, there's many different parts and other industries that we can tap into, like financial planning and accountants. What are the tax benefits? How is it going to, you know, affect me, my business, my overall cash flow, for example? So I think there's so many different moving parts that come into this conversation and the overall outcome that we're trying to achieve by the end of June to have that tax effectiveness. When's the right time that we engage and start those conversations?
It's a bit concerning that people are waiting till the end of financial year.
It's too late.
BAS is done quarterly, can be done monthly. Why aren't you looking at it then?
Correct.
Like, genuinely, if you know you want to buy that car, why do you wait till the end of the year? You're going to get the same benefit whether it's the first quarter of the financial year or the last quarter.
Yeah.
Right? So I'm of the belief, every quarter looking at numbers, I do the same thing and see how much damage you've done with paying the tax man, but how you're able to be tax effective. Why I just don't understand why people are waiting for the end of financial year. That's great for car dealers who need to clear the stock and they really ramp up marketing from probably now towards the back end. Mm-hmm. But it should be something quarter in, quarter out. Like, stay on cross your business.
Yeah, and look, you said something that quite struck me, Charlie, and you know, it's not your St. Charbel beard. It was the word of February, March, right? So by February, March, it is a beautiful beard, by the way. I think the two boys are a little bit jealous. But let's focus on money for now.
Not at all.
So you mentioned February, March, and if you think about it, for most people, by March, definitively, you pretty much know where you are going to land financially for the year, right? Your financial year is only 3 months away. That pattern is already happened, it's already in play, and the trajectory is pretty much set, right?
Correct.
So that is an opportune time then to go, March is done, April really is, it's a great point to start considering, what does my end of financial year look like?
Correct.
And, if we lean on tax, not tax for your accountant, because that's your July job.
Correct.
Right? Tax before that point is looking at your income, looking at all your different silos, your super, your investment properties. Have I put all my tax opportunities in the right place to reduce the amount of tax I'm donating so that my accountant's job, while still difficult, is on a lesser value?
Correct.
Right? Any thoughts around this? I mean, you would see this all the time.
I'd hate to agree with Gab, but
No one ever likes to agree with Gab.
Hang on a second, let me write down 1 for Gab.
1 for Gab,
But
No,
200 for Jack.
he's right, jokes aside, because why do you have to wait till June that? But I think it comes back to discipline, educating your clients. Now, as a business owner to yourself, your mindset's triggered at BAS quarterly to review things. We can impart that to our clients in the same way as you do that. So he's right, and I agree with you.
But the trends are there.
Yes.
Year on year. If you've been in business 3+, 5+ years, you can see your trends. You can see usually I finish strong in the last quarter of the year. How I know from my own perspective, I'm finishing off strong this quarter. Where did I land this time last financial year quarter?
And what can I do better?
Correct. Where do I need to go? So the first thing I do, put a call is the accountant. Hey, I'm going to be in this position. What do I do? Accountant can only do so much. Then you go to your advisor, and as industry specialists, Charlie, we should be, at least from my perspective, advocating what can be done for clients, and Charlie, on the other hand, advocating what can be done for brokers to offer their clients.
So that's the thing. You advocate for certain things, and at the same token is on the other side, the accountants can do that side of the fence, or advisors in this scenario as well. Yeah.
I think there's another lens and a bit of possibly another layer to it, Mel, because we talk like Gab saying, what are my figures this time last year, and where are my trajectories for this year? But at the same time, sometimes when we're with a client, do we get a chance to actually stop, remove ourselves from the transaction and what's in the pipeline, to have a different style of conversation, and what are those triggers whilst I'm there?
Yeah.
To help me identify what it is that I can further take this sort of relationship
100%.
and transaction to a different level.
100%.
And I feel, and I know we talk about it a lot across the industry, and you guys being one of our sponsors, in our upcoming webinar, we're looking at things in ways of how to diversify, but also whilst I'm there and the customer's with me, what other opportunities have
100%.
I actually missed out? What other opportunities and who else can I utilize in this transaction?
Can I give a teaser?
Of course.
It was only this week I was reviewing financials for the last 2 years, and I said to the client, you've paid some debt off, and is your intention, it looks like it's upcoming late this year, is your intention to upgrade the car? He goes, how did you know? Well, I've looked at your figures and your debt's decreased.
Correct.
So one would only assume you're in the electrical game, your car's up for renewal. Do you have a balloon there? Because it looks like the payment. He goes, yeah, I do actually, but I want to upgrade the car.
Right. So it's all about timing and coordination.
Yeah.
I love that.
But I guess also it's identifying it. Like you're looking at the financials, you're looking at the balance sheets, the P&Ls.
But why wait till the end of financial
My
year?
point.
Correct.
Exactly.
Yeah.
Correct.
And imagine if Gab didn't do that. What are the repercussions for that client?
Look, they're on top of it, but when you look at the end of financial year, why wait? Do a lot of people, are they aware that there's
What is
runoff
the
stock?
impact?
There's runoff stock. So in essence, that if you're waiting for the end of financial year to come to go, I want to buy that car, is it a strategy whereby the van you want is going to be for less because the new models come out, they want to clear the stock?
It's cheaper.
Is there a financial tax or a strategic purpose as to wait other than you just think it's habitual and I just wait till the next financial year? So what is that impact? Is it a positive or a negative, or is it a neutral? So have a conversation with somebody. Don't wait.
Yeah.
Absolutely. When would you see are the biggest disconnects? Because all of us do very different things, right? So we've got our advice and insurance protection lens, we've got our lending lens, and we've got our voice of everybody lens here, right? So when would you see in these conversations around, I guess the two parts is, when is really the end of financial year starting to be considered, or when should it be considered? What should we be looking for earlier when it comes to our various clients? Because all of us have different types of clients. And what does that disconnect look like is my question to each of you. Gabs, did you want to sort of kick off with this?
I mean, when I think of disconnect, I think of the internet. And a lot of people are like that. There's no connection, right? I just believe people are not close enough to their business.
Yeah.
So doing the same thing over and over again, I think Einstein said it best, is a sign of insanity. So if you just see cash coming in the business, ultimately what I'm seeing is people paying more tax. And they say it, paying too much tax. But what have you done to do that? Are you aware you can make super contributions to help you reduce tax? Are you aware you can potentially diversify some of your business? Look at other avenues. You're doing residential, electrical, for example. Why don't you do commercial? Oh, it's too hard. Is it a too hard basket because you see the cash flow that's coming in? You need to do something with your business because, a lot of people get bored with what they do.
Yeah.
So by having an advisor come in and, giving them that kick and respect to, you can do things and not be on the tools. You can't earn an income, I apologize, without being on the tools. Right. And I'm sure you probably see it as well, where they didn't know what they could achieve.
Yeah.
Hypothetically, by throwing an extra $100 or X amount of dollars into their super. A lot of business owners are time poor, so they believe they don't have the time.
But, leaning in on that, and I think it's a really great lens that you bring, which is a business and setting up something new and doing something different and diversifying. But that takes time, right? So if you do that before June or July, you've got that quarter to set it up because you need to set up the structure, the trust, the different entities, all the bits and pieces that go with it. So again, as a broker, you're seeing those things and those opportunities and it's identifying it and giving them the space and the time rather than being reactive. They can be really proactive and thought considered in doing it and all the benefits that come with that. They're not leaving things under the table that they're missing out on. That's how I sort of see from that, what you're saying. And I think it's a great thing.
I guess it's the conversation triggers as well.
It is.
Like sometimes I cannot be a specialist at something, but I also know the person that is.
Correct.
So sometimes it's me creating that interest and then passing it on.
Do you listen to the things that I actually say?
No, I'm reading your mind actually. Because of Gaby's conversation, I was actually going to go in, like you're talking about that Sparky, right? Who is doing residential. Look at diversifying your business offering, going into commercial.
Yeah.
But then let's put the lens of where Riker comes from and then other opportunities that you can possibly cross-sell whilst it's not your specialty. Life insurance, income protection.
100%.
Does you know what I mean? So
yeah,
looking at the whole, and across the industry, I think that's probably our biggest lack or fault that we don't do well is that we focus so heavily on what's in front.
Charlie, ask the guys, I draw a mean stick figure.
Do you?
Oh, yeah. I'm buying Gabs for Christmas this year a big box of red markers. So his stick figures are drawn in black, but he puts a red cross through them when they've died.
Oh, wow.
Yeah.
So to your point, Charlie, it's about creating a need, creating the urgency around, right, end of financial year is approaching. That's the majority of the questions. The answer, what do I need to do to reduce tax? Why are you waiting to end the financial year to have this conversation?
Yeah.
Right? Have it earlier in the piece.
But these disconnections, they compound.
They do.
Into bigger things, right? And I don't know if you all agree, but people hear end of financial year, and I know I said this earlier, and the first thing they think of is tax. But when you think tax, you think accountant. So it's about what can I get back, what can I get back? So it's all about deductions. People are not thinking tax, and instead of deduction or claim, they're not thinking optimization.
Correct.
So what is it that I could be doing in this last quarter that puts more money back in my pocket in all the different ways? And whether that's a refinance, a restructure, the setup of a company, whether it's putting money in their super, buying that insurance policy that is tax deductible as well.
Correct.
But all of these are optimization tools, and there is a disconnect. Would you not agree, Jack?
That's true. But you go beyond a little bit that once you, in a financial year, tax is the one we talk about. What do you do with that tax saving then is the next question. How do you use it? It's another following a bucket of save tax, great. put in place before June, what do I do next to do with this? Do I
They'll
put
have
it,
the same conversation.
do you put it to the
12 months
mortgage?
later.
Do you offset the thing? Do you do all this stuff? So it doesn't stop there in a
Yeah.
sense. So you continue on to partner, Hey, Gab, what about this loan now? What do we do with this loan? Or the account, how do we structure the trust structure on this? Where do we put the money in there?
Yeah.
So they're all going to be interlinked to Charlie's point as well.
Yeah.
Having that conversation.
Yeah, and I'm curious because obviously FBAA is all about being the voice and the education of brokers. When we talk about these gaps at end of financial year, what's and there might not be a view on it, and that's perfectly fine. But what is the view of like where do you guys see that gap or that education opportunity?
The education opportunity for us and from what we see currently, Mel, is people just don't know.
Yeah,
They
you don't know what you don't know.
It's correct, right? And as I said before, like there's certain conversation triggers. People don't know how to tap into that. They don't know how to identify it, right? So, and this is where a lot of the times where I'll have just general conversations when I'm out in the industry and I'll look at, for example, earlier today, I was talking to a few of these brokers. Some were still new in that first 12 months, right? And we look at different stages of a broker's life cycle. You got the startup, you got the grow, and then depending on how far their tenure is in the industry, they could be at different levels, right? But I guess when we look at, for example, someone who's starting new in the industry, we look at what's their main focus, understanding the lenders, understanding how to go out and market, look at a niche market, for example. But at the same time, you got so many different opportunities that you can tap into. Like, for example, we'll look at a resi broker, right? A resi broker might have a conversation today, which I call the discovery. By the time we get to a lender and settlement, depending on the settlement date, it could either fall in this month's commissions or the following month's commissions, right?
Yeah.
What we find the biggest struggle for brokers these days is the cash flow. I can't maintain more of a career in the industry for more than probably, let's say, 9 months. If I'm pushing at 18 months, because that cash flow in between, whilst my savings are drying up. So my conversation piece there is, okay, you've got so many different ways you can diversify your income, right? So we look at the likes of referral partners, okay?
Yeah.
There's insurance policies, there's other ways they can tap into, right? Then we look at things like personal loans.
finance, yeah.
But it's also they don't know how to identify it. They don't know how to ask it. And it could be just a fear of possibly saying something wrong.
Right.
100%. And it's a fair thing, right?
It's a fair thing.
Absolutely.
So for us, we look at how do we make them more confident to be able to sit there with the client or with their customer,
Yeah.
right? Discover what it is that they want, their
Yeah.
future goals and plans. Whilst you're having that conversation about their future goals and plans, there's other things as well. I could be married with 3 kids. Okay, I want to set up my kids financially.
Could be
stable.
married?
Could be the electrician who wants to go into
be married.
commercial,
Could
right?
be married.
Who might fall off a scaffold. Have you thought of income protection, right? So there's so many different ways that they can keep a healthy income stream, maintain, income to come through to support them while
Yeah.
those settlements come through.
I'll tell you why. I'll tell you why. I'll talk it from a broker's lens.
Tell me.
Yeah.
It's in a too hard basket. My focus is on revenue, and some brokers can't handle objections.
Absolutely. But can I?
They
Yes,
can't
go.
handle
Oh,
objections.
this
We're gonna
Gloves
have
off,
a- we're gonna
guys.
have a
Gloves
good
off.
healthy
I love
debate,
this.
right?
Because I do
They-
have strong views on this as well,
Yeah.
but I think Charlie
I'm-
shares my views. So
Yeah,
unleash,
I do.
Charlie.
I'm going to have a healthy debate here with you,
Okay,
Gab,
let's
No,
go.
no.
because at the
Tailor
end of the
chip.
day, it's not my specialty. But
Do you want gloves?
one thing, that'll be round 2.
I can't argue with financial.
One thing. I feel like the editor's gonna every time he says that, like Saint Charbel, I feel like he's gonna put a photo of
I'm
him
not saying
like, as a floating face.
Well, we actually already signed that. Are you okay with that?
I'm fine with it.
Okay, done.
I'm fine with it. I think. Look, I remember. If I think back in my banking days, in the sense of when I first started in my early 20s, right?
Last week.
Last week, right? I know the beard just kind of grew overnight, and the greys is just aesthetics, yeah.
Yeah, I agree.
Yeah, and I came into from personal loans to home loans and then home loan call center, and obviously, KPIs back then was the cross selling, right? It was identifying certain triggers in the conversation,
I know where this is heading, and
Right.
I like this conversation.
And all it was-
I've got to.
and all it
follow up
was,
on
wait, your turn.
Yeah, I am.
I got the microphone. I'll pass it to you shortly. And all it was a referral to that specialist who would have that conversation.
Right.
Yeah.
But what it was for me and what I sort of thought, and I sort of feel it's still something that but something that can be put into play today. If I was to sit with Mel and I said to her, what was to happen to you tomorrow if you were to cross the road on your way to work and got hit by a bus? It's not making
Those
them
kids would
fear
get a day
the
off school.
thought. It's more the fact that I'm getting Mel as my client to think, am I actually covered? Right? Now, I've created the interest. She's there. She's hot. You know, Gab is a specialist.
Are you calling me hot?
No, in the sense of like,
I got
the lead is hot.
Oh,
you are a
right,
beautiful
okay.
lady, yes.
Charlie,
but-
you know what's interesting?
What?
It's so scary. We're both agreeing
In a different way.
in a different way.
And probably a different approach.
I'm everything you're saying. I agree,
He's going to
I've
cry.
touched
I thought you were gonna do this.
No,
Do you wanna
he's-
hug?
and I tell you the
It hurts
reasons
you.
why.
hurts.
And I'm coming from a broker lens.
Yeah.
So you're coming from an industry lens. I'm coming from a broker lens, right? So as part of an academy that I have, we coach this, and the reason why we coach it purely due to multiple reasons. First and foremost, it's you need to be offering this product in respect to financial planning. You've got an obligation. We can't be just deemed as brokers to be just writing loans
Correct.
and then setting them and forgetting them. Well, I can't say what I'm thinking, but we can no longer think like that. We have to take that hat off.
Yeah, but also
And I
the
get-
set and forget as well is where you kind of lose that client.
Yeah.
But this is my
Where
point
do you
exactly.
take it from transactional to relationship?
Correct.
Wow,
And where do
wow.
you take it from
people say to me,
adding value as well?
correct.
Yeah, but passive income is king, you know, and I'm going to sort of add a layer here is that, you know, in our world of financial planning, we talk about the things that are in the distance and forgotten, and it's retirement planning, super, things like that, right? If you then circle that into, and that's because it's passive, it just sits there in the background. Diversification is passive and it sits in the background. It's not changing your bottom line in a big way financially in that immediate moment, but it is compounding and it does grow. And it is getting brokers to look past that. So you talk about, and it's wonderful, you know, that you identify it, is that, you know, brokers talk about, especially young brokers, the ability to get past 2 years of starting a business is such a challenge. So if you do that diversification, have that passive income in the background, it will be the difference, and it can be the difference between survival or failure. And it's not about being an expert. It's just about going, I see you, I hear you, let me introduce you. You don't have to be an expert.
But it does help your bottom line. I literally
No, it does, but
on it-
people
on-
don't see it in that immediate moment.
But this is where we have to do better.
Right.
So I was having a conversation. I've mentioned it before on a treadmill. Guys just sold this property.
I thought
He's
you were
come
on a
across.
treadmill. Sorry.
I
I was
don't
having
run.
that conversation with me
I don't run. On a-
on the treadmill.
Together.
I'm actually getting you to get on a treadmill, but anyway.
Caps.
No, so we were on a treadmill, but this is how casual the conversation was. It was like 4:45 in the morning.
Oh, it definitely wasn't Charlie.
No, he was too busy combing his beard.
I was.
But it was just, oh, you've come across the cash. What are you doing? Oh, I don't know. I'll put it in a term deposit. I've gone, great. I'm going to put you in touch with our advisor and let him have a chat with you about what the next step is. Now, you're saying it doesn't affect the bottom line. Forget about the revenue that may come from the back of that. He's now gone to the advisor, and the advisor's agreeance with us. We got a loan on the back of that conversation.
Yeah.
So when I can't believe we're agreeing, but it is. But it's not complicated. It's a simple question. But unfortunately, people have issues with objection handling. And if they get told no more than once, like, oh, the client just doesn't want it. So we come in an angle of, well, what's your value proposition? How did you propose it? Did you just say you need life insurance? Because the old tactic back in the days was the bank won't do it for you if you don't take out insurance.
Yeah, correct. I remember that.
And we had to shift that mindset when I left the banking game. We had to shift it. You know, being in the industry over 20 years, you have to shift the mindset.
100%.
So in essence, yes, great. You may not be helping your bottom line short term, but long term, that's how you gain referrals.
Absolutely.
By having that question, asking that
Absolutely.
question.
Yeah, and I do agree. But let's move on to some scenarios. Let's do a business owner or a complex client. So for business owners, complex clients, where do you see the biggest gap showing up around that end of financial year? And I guess when we say business owners, let's refer to brokers, for example, because they're all business owners, right? Where are they losing value without even realizing it? Like, what could they be looking at, or what identifiers should they be coming across? It's, you know, profit versus tax, you know, distribution, there's a whole array of things, you know, again, super, trust, things like that. Anyone?
Initially, it's cash flow. And And then once you've monitored your quarter in, quarter out for that financial year and you work closely with your accountant, then you've earned the right to have a conversation with a planner to discuss personal wealth.
Mm-hmm.
Because you've got things down pat, and sometimes it takes you a good 12 to 18 months to get into that rhythm.
Yeah.
But once you're in that rhythm, you've earned the right to go, right, the business is cash flow positive. You'd spoke to me 12 months ago as from a broker lens. You've spoken to me 12 months ago about a planner. What is it that we can do to help me grow my personal wealth?
Yeah. And how do you separate the two or make sure the dots are connected on both and they're not competing with each other, which you see this all the time, Jack, where people are self-employed and they're using their personal wealth position to fund their business position. And when that transition changes and that business bucket is, for want of a phrase, overflowing, they actually haven't returned the value or swapped it out.
It's a tug of war. I mean, Gab sees this all the time. Business versus personal, they cross over so many times.
Yeah.
And sometimes the purpose can be detrimental. As an example of that, obviously from an accounts perspective, you want to reduce tax. But from a lending perspective, you want to show income. So you need to have an alignment there.
Yeah.
What your plan of attack strategy
100%.
going back to the end of financial year.
Yeah.
When do you start to do that?
And I would throw in from an advice perspective, you want that time, which is I think April is a great time to have that lens and that time frame to go, this is now your new world and we need to restructure, because in that way in the next financial year, you've got a full financial year to the benefit of that. And if you waited, you're missing that time frame.
Correct. And then you start to engage, hey, Gab, I need you this for this. Hey, Charlie, need you for, if you're an accountant, bring the team together and then work out a plan of attack before it's too late later on. So,
absolutely.
Yeah.
Absolutely.
Definitely.
Charlie, I mean, you speak to all different kinds of people. Do you come across this in your space?
Look, I guess from the association's perspective now, the conversations are somewhat different. I do still hear a lot of it and I do get a lot of different conversations coming across. But I think to what's been sort of said earlier, it's the timing, one. Two, it's, you know, like, I think Jackie just said it now as well. Like, if you're going to have that conversation, let's rebook it again in a week's time and let's have all the relevant parties in that same meeting. Does that make sense?
Yeah.
Whilst I can do a spot and refer and that works great, but sometimes maybe connecting the people in the same room, same time.
Yeah.
That is a different synergy. But also, I guess from a customer's perspective as well, I'd say having us all there together, working that out together, making it a whole plan.
Yeah.
And this is the result that we can achieve. I think that's more powerful.
Yeah.
While we're there in that same room. I mean, as I said, I can't really say much now from the association's perspective and
That's
what we
okay.
see.
Yeah.
But if I was in the lending space, back in that sort of space, and I was dealing more with the planners and you know, from small biz to commercial to all the rest of it, and then that chaos.
Yeah, but you can still guide a broker and encourage them to align themselves with a
And I think you
writer.
articulated that well before.
Yeah.
You know,
So-
that's early stage broker.
Early
Even
stage,
an existing broker that's not doing, they could do better.
That's correct.
I personally believe, I'm probably going out of way here, the aggregators in line with the FBAA need to be in the same
Page.
as part of the induction and not necessarily, look, I don't consider a spot and refer as a revenue raiser. Yeah, great. All is well, you make $1, great. But you got your client's best interest at heart, genuinely. Because at the end of the day, if they don't have the adequate cover, and I've seen it from my own eyes, people who have declined to get cover and an incident happens, and it was personal to me, it happened, you just say to yourself, had they only listened, did I do enough to push? So, but again, to your point, the education piece is important, and you guys as an association are stepping up to the plate, and us brokers who want to see that ongoing are trying to lead from the forefront.
Yeah. Well, why don't we move from, instead of like an early stage broker, which I think, you know, it's a really bad play on words, but, you know, they're pliable. Like you can mold them in a positive way to a journey. What about an early stage client, like a young accumulator, a first home buyer? You know, what are they missing out on by not identifying things at the right stages in the financial year?
I have to say the biggest thing I'm seeing now, and you guys are well part of this particular initiative, financial literacy.
I love it.
I really feel as a millennial, or not me, but millennials, I think, lack financial literacy.
They do.
I know from, like, for example, I mean, I'm one of 7, and I've got, at the moment now, there's 9 nephews and nieces, and there's probably a few of us are going to have a few more kids. But I look at, like, my older nephews and nieces now who are working full-time jobs and so forth, you know, and I mean, I started young, so I'm 20 years ahead of them in regards to assets and wealth building and things like that. But when I look at them today, I mean, I'll give you a bit of a scenario. One of my nieces who's working 3 jobs whilst studying full time. And I'm like, where do you find the time? 1, but 2, I look at her and I say, what are you doing with your money?
Good girl. Good uncle.
Oh, but I'll tell you what the answer is. Oh, do you like my nails? And she got these big Dracula looking nails on, and she put super glue on her eyes and got the eyelashes put in. And I'm like, you just spent $400 on fake nails and eyelashes?
Do you know who I blame for that?
But
do you know who I blame?
Wait, don't go there.
No, it's not individuals.
I know where you're gonna go.
No.
The influence from.
Kardashians.
No, not even that.
Oh.
Not even that.
okay.
I'll let you finish first.
Okay, yeah.
I'll let you finish first.
But then I sit there and I say to them, like, I'll give you a scenario. So she said to me the other day, she goes, oh, one of my tires is going bald on one side. And I said, and just to sort of make her sort of feel a bit more independent, I said, well, there's a mechanic right there. Do you want me to walk you to him? I told Dad last week and he hasn't done it yet. And I said, well, hold on. You want to own a car? You want to drive a car?
Oh, yeah. Big rules around
You want
that
to go
want the
work
responsibility
3
of the car.
jobs, but it's okay to be independent enough to go to the mechanic,
Right.
get a quote,
Yeah.
call me and say, hey, he quoted me this. But in the sense of what they earn is what they spend.
Yeah.
They don't think ahead. But then I also look now, and, you know, from a broker's side, for example, you can say to a client, keep saving, let's put saving strategies in plan.
Yeah.
But then I'm like, you had all these years
I'll tell you
of the age of, sorry to
can I
say,
tell you?
15, 16, they're starting to work now. They want to buy their first property at 30. That's 15 years almost there
But I can
later.
tell you who has a big part to play in this.
Who?
The school system.
Well,
Oh,
as
absolutely.
I said,
well, that's why we're talking exactly what Charlie's
coming
leading
back
in
to
on.
the financial literacy.
Financial
school
literacy.
system.
Yeah.
So
Yeah.
we're
Yeah.
super excited, and I'll give them a
Yes.
big plug. You know, financial literacy, independence solutions. Oh, the girls are going to kill me. Fit. So Beth and Victoria, so Beth
Yes.
Camino, Victoria Costa,
Shout
are
out to
doing this.
Beth
Yeah,
and
absolutely,
Victoria.
every day, and we're proud to be
Shout
a
out.
part of it at Riker, as is FBAA, and they're doing a financial literacy program in Year 10 students where it talks about how to set up a super fund, what is payroll, what is savings, what is a mortgage, what is interest, and there's a whole other layer of things that they're doing. But it's just, it's heartwarming, it's enriching, it is our next generation, and you know, it's going going gangbusters.
At school, you're told, keep quiet, sit down, speak when spoken to. And then when you get out there in the real world, you're told, you're not talking enough, you're not contributing, I need to let you go.
Oh, 100%.
And that just nails that piece. And at my son's age, I was in school getting a tax file number.
Do you remember? I mean, we're give or take, you and I are only a couple of years apart. I mean, you're probably 10 years older than me, but anyway. Do you recall? I still have the actual book, the big yellow bank that used to give us the Dolomite accounts.
Oh, the
I don't
Commonwealth
have that
Bank
book
account.
anymore, but yeah,
I
not
wasn't
yellow,
sure-
it's red,
I wasn't
isn't
sure if we're able to say, you know, as in
Dolomite,
banks and whatnot.
yellow.
But the Dolomite account,
Yeah.
right?
CBA.
That taught me from, I think I don't know how old I was. I don't know,
at
it would've
school, $2 put it in.
Yeah.
Yeah.
Oh, it's a favorite thing.
Yeah.
You know what? That leads me to the next thing we could probably talk about. And I think it's a really good thing to sort of circle it in on. You know, how can clients, or what should clients think about when it comes to getting the right support around them? So we've spoken about brokers and diversification and things like that. And that's fantastic. And, you know, I'm a massive fan. For those of you that know me, I've been swinging the word diversification around for years. But for clients, you know, how do they get the right support to fill in those broader gaps, you know, thinking about it? What does it look like? How do they connect it properly so that they're not doing things in fragments?
It's
Stop talking to
quite
Stop talking to Uncle John at the local barbecue.
yeah. It's quite challenging.
But sorry.
Yeah,
Jack.
go.
The Uncle John at the barbecue, and if
The wealth of knowledge.
Because he is Uncle John.
I am the
That's
Uncle
why
John.
he's saying it.
But for example, me as the Uncle John at that barbecue, and I'm always out and about at barbecues and lunches and dinners and God knows what, and I hear these little conversations, and honestly, in my head, it triggers so many different ways that I can say, hey, give this person a call. Sometimes that person at the barbecue having that conversation, whilst they're in that raw stage.
You don't get the Uncle John joke. The Uncle John joke is, this is what I did at your age, go do it. Whereas to your point
I
is,
understood that.
hey, your circumstances were different to mine at your
Correct.
age.
Yeah.
You need to go and speak to this person being
I
Jack.
understood that. Yeah, absolutely. Absolutely.
And we're surrounded by social media. It's not just the Uncle John. It's the TikToks, the YouTubes, the Reels. You know?
absolutely.
It's so hard sometimes with this generation. That's why that fit thing goes back to the roots, to the actual classroom, and say, hey, this is the proper way of doing it.
100%.
You still watch the
100%.
TikToks and the Johns and Gab dancing and stuff like that on TikTok.
Yeah. And I think for clients to get the right support around them, it's not about solving it in one conversation. It's about just sort of starting at A, going to Z, joining the dots. Z, I sound like an American. Z.
Z.
Yeah. And just making sure that things are looked at in the right order. So, meet with your broker, meet with your financial advisor, meet with your accountant, meet with your doctor, whatever it might be, and just get things in a row, so things are connected, because all of it plays a role together. And I'm going to be a bit like you, Charlie. It's going to hurt me. I can't believe I'm referencing you, Gabs. It's have your circle. Have your circle. So I guess from today, because I feel like, we've only sort of scratched the surface today, and I'm actually really impressed with you, Charlie and Gabs. I think you've both been well behaved. I was a little bit frightened about getting you together.
No, they edited the parts where we weren't behaved, guys, just to let you know that.
Stop it.
We had a pinky
Yeah.
promise downstairs. that
We know how to keep up
if we're
professionalism.
both on good terms, he'll buy me an ice cream, I'll buy him a lollipop.
Oh, deal. Yeah. Okay, so if there's one thing
Strawberry.
for today, okay, guys, don't break your fingers.
Thanks, buddy.
Okay, all right. I feel like I need to monitor the both of you.
I told you we should have been on the other side of the...
No, we just only wanted blood splattered on one side of the wall. So, all right. Sorry, guys. So if there's one thing that people should take away from our conversation today, whether it be a broker, whether it be a client, whether it be just as an industry, and apply it now, what would it be? So, what could that practical shift look like? Jack, I'll start with you, my friend.
I think we live in a world of a lot of information going back to that. It's that word fragmented, using the right people to your advantage. But the same token, who do you go to the right people? Education,
Yeah,
right? So it stems from that.
yeah,
Getting the right education from the right sources, whether it be the aggregator or the industry body or mortgage broker, accountant, financial,
Yeah.
they all collectively form part of that anyhow to
Yeah.
make that well-informed decisions.
Okay, great. I love that. All right, I don't want to fight it out with you two.
He
wants
can
to-
have it, so he can go first.
Oh,
We're
Gabs.
saving the best for last.
Ladies.
You know what? I
Gentlemen.
actually agree with
Pretty
you, Charlie.
is safe for the last.
Gabs, you can go next. We'll save the best to last.
Start your end of financial year conversations at the start of the financial year. Because if you've got your circle aligned and you've had the conversation, you've said, look, based on the last 2 years' numbers, I'm going to be in surplus 10,000 or I'm going to be in surplus 50,000. I don't want to pay the tax. What do I do?
Yeah.
Then you with the advisor and the accountant work collectively to guide that owner, business owner, for example,
Yep.
to put a little bit of cash aside to
Yeah.
make a super contribution, which is going to reduce your tax. So again, it comes down to your circle.
And you know what? That's great advice because that's a really practical shift and it stops pressure from
It
building.
wasn't advice. Just to
Sorry, disclaimer again. It's really wise words.
Wise
there you
words.
go. Reframing.
Yep.
It's a practical shift, right? So it means that
That's all
pressure's
it
not
is.
building at the end. And then all you're doing at the end, even if you do it in April or May, for example, is just a checkpoint.
Correct.
Did I tick that box? Have I achieved it? Do I need to adjust anything?
Mm-hmm.
I think that's really, you know what? Mate, you're on a roll today, Gabs. You're on a roll. Done. All right, Charlie. Big guns. Let's go.
I'm going to close it off with do not fear the curiosity
Yeah.
of the unknown and just ask that question.
Yeah.
I love that. Did every broker hear that? Say it again, Charlie. Do not fear the unknown.
Do not fear, no, do not fear,
fear the
no, no.
curiosity.
Do not fear the curiosity.
There you go.
Yeah.
Ask the unknown.
Yeah.
And what was the last part I said?
Ask the question.
Ask the
think-
question. That was it.
It sounded great. I know that. I know
Cut
that.
that out and just put the first part, but replay it twice.
Yeah, no, we're live streaming. It's all in. It's all in.
Are we?
It's all in.
Well,
Yeah,
Well,
absolutely.
the silliest question there is
Yeah.
Well, copyright
the one
for
you don't ask.
Yeah.
100%.
And I think that's what we all fear.
Yeah.
Like, I mean, I know sometimes myself, I won't ask a question. I'm like, do I sound dumb?
Yeah, unfortunately, I think people fear the fact that I actually ask every question. I don't keep the
But
silly
that's also your
questions in.
curiosity, right?
It is. I'm very curious.
And that's how you're going to learn and you're going to know, and you're going to know what steps to take next, I guess.
Yeah.
And I think that's what we all lack and fear and miss out
I just
on.
want to say, sorry, I know we're getting there, but you'd rather ask that extra question and
100%.
fear of being criticised than
Get it
make the
wrong.
mistake and go, oh, I can't undo it.
Yep.
The reality is there is no silly question, right? The question that's in your head is probably the question that if there are 20 people in a room, 10 people are wondering.
Yeah.
You just need one person to be brave enough to ask it.
We'll make sure you do
I
it.
like that statement. So I used to interview-
Copyright it.
No. I used to spin that differently when I was interviewing previously for people to work. That was the question I used to always ask. There's 500 people in the room. You as a BDM, for example, 10 of them know you. 490 don't know you. How do you get at least 20% of that room to come back and want to ask you or speak with you?
Yeah.
And find out more.
I love that. That's a great thing. But today has been wonderful. You guys have been amazing. What my takeaway is from today, and thank you so much, is that end of financial year is not the starting point. It should be a checkpoint. It's when you identify those gaps and really elevate from there, right? So the real opportunity for me is recognizing those gaps earlier, connecting the right dots and looking at all the bits and pieces that go with it, and making sure that your progress for financial success is not left to the last minute. You're not leaving money under the table, let alone on the table, and that it's yours to retain. So thank you so much.
Thanks,
Absolutely.
It was a lot
Thank
of
you.
fun. And we'll see you all before June.
Yes, we
I
shall.
look forward to it.
Thank you for joining us on the Wealth Guide podcast. I hope you got something out of today like we did. And the biggest thing that I took away today was financial progress does not always come from doing more. It comes from making sure that decisions you're already making are moving in the same direction. And when strategy starts to connect, progress becomes easier to see. So stay tuned for the next Wealth Guide podcast when we talk about when headlines shake markets and what it means to investors and financial decision making.